all, welcome to Bro Billionaire. This is RP here. It's 11th of June 2023. We'll try to forecast Nifty's move for the next week with price action and indicators first, then we'll check the Elliott Wave. So with price action indicators, we'll try to analyze Nifty first. And here we still see everything in a bullish zone except the last two sessions red candles. So they are looking to be complete bearish Marubozu candle, and they are at the trend line support. So this is the trend line that you can draw. So here you got 3 touch points, and this price is breaking this trend line. The trend line break is not confirmed until it breaks the last point, by the way, but this gives a red signal that there is something wrong with the price, or there is something wrong with the index. 2 sessions in a red. The price is still above 13 EMA, so we can't say that it is bearish. It needs to close below 13 EMA, then we can assume the bearish scenario, and we can look for the next support at 18,180 or 18,200 levels. So this is where Nifty could pull back if you consider Nifty to close below 13 EMA. Everything is bullish. RSI is still above 50. Aron indicator is still at the extreme bullish zones, and price is trading well above all the short-term and long-term moving averages. So 100 EMA is this one, 200 EMA is this one, and this blue line is 13 EMA. The price has not yet closed below that. But what I will assume is if it closes in a next session below this, I will look for 18,200 on the downside, considering only price action and indicators. There are two red Marubozus here. They are full red Marubozu. This is something to be worried about. And yeah, something like this happened here as well. So you might consider that it might reverse like this as well, like this time as well. But here you can notice the difference. Here the second candle closed a little higher than its low. Here the second candle closed exactly near its low. And next day, you can see here third candle did not close below the low, like closed just near the low of the second day candle. Okay, so that's why it took support on short-term moving average 13 EMA and then bounced back. Here it made hammer candle, close again above 13 EMA, and then continued the up move. So let's see, the next day's candle is important here. If the third candle closes red just below the slow, then that is a 3 black crow pattern, which signals a reversal on the downside. Then in that case, we have to look for 18,200. And yeah, as of now, the indicators are bullish. So let's switch back and check the Elliott Wave. So these are the two charts from last week. So this was the first chart where we assumed that Nifty could be making 1, 2, 3, 4 pattern. So this could be impulse pattern. That's what we were assuming, since the previous move was a little slower than the up move gave this time. So the high it had made is 18,888 last time, and the current high that it has made here is 18,777, right? So almost 777. Just ignore the dot part. So that there is something in the numbers as well. So 888 and 777. We need to also consider these numbers as well. So I don't believe much on these numbers, but there is some coincidence in these numbers as well. So we have to consider that fact as well. Let's check here now. The wave counts that we plotted seems to be a little off, or you could say we already discussed last time that these wave counts are not much clear, and the 5-wave impulse from this part is kind of not complete, or you could say there is no clear impulse with 1 to 1 2 patterns. Here it looked one impulse completed till this part, but this correction was not so complete. This correction was not bigger than the previous two corrections. It was just 4 days selling. So this is 4 days selling, or this is 4 days correction. This is 4 days correction. This is also 4 days correction. Not in days, but this is 4 sessions correction. That's what I should say. When you check 4 days Nifty were in correction, then it gave bounce back. Similar here, similar here. So that's why I plotted the wave counts 1, 2, 3, 4, and we extended the 5th wave. And here we were considering 1, 2, 3, like this patterns, and we were expecting it to break 18,888 in a third wave. Then the fifth wave should complete somewhere near 19,200. That's what we were assuming based on 1.618 extension of fifth wave. But there seems to be a problem because of last two sessions selling, and the wave counts are looking to be changing. Then again, this wave count also does not having a good probability now. This is also going to fail. That's what I believe. And both the wave counts, I'm highly doubtful now because of the last two sessions selling. The price has retraced below 0.32 Fibonacci. Let's go on hourly chart. We'll discuss this wave count later on. So this is the last leg of rally, right? So this is the last leg of rally on hourly chart. If you see here and plot 0.6 Fibonacci, the price has went well below 0.618 Fibonacci. So this is one way move, right? Green candles, and then the price has closed below 18,625. Even if you check here, the price is already broken 0.620 Fibonacci. This is not by big margin, right? If you consider a three-way move going up, so price has closed below this. So this is coming around 584, and the price has closed somewhere near 567. So this has been broken. So that's why a little scary picture. So we'll discuss two wave counts today. One is that the Nifty could have made a flat correction. Okay, so then in that case we have to consider this as an impulse correction. Okay, so this could be either 1 or A. If our wave count is wrong, then it can be A. The move does not look completely impulse here, so there is a chance that this can be A as well. And this entire rally last time that happened, if the wave count, like we have to find out the wave count, by the way. I'm not so sure now on the wave counts from the all-time high of 18,604. So this is clearly a double complex correction or double zigzag. Here we can consider this as a wave as well, A, B, and C. So currently it could be C wave going down, but I don't want to scare you right now, and I want to wait. So this can be wave 1 or A, and this could be B wave or wave 2 completed, right? And then we'll have a C wave down. So 5-wave impulse could be there, 1, 2, 3, 4, 5 like that, or it could be a 5-wave third wave as well, and then the fourth, fifth will also continue taking us more on the downside. So this is the first wave count that I can come up with, where we see this as an ending diagonal structure. Here the fourth has not violated, but it has missed by very few points. And then if we have to consider this has made a top here, Nifty has made a top here, then I have to change the wave counts the way it should fit, right? So in that case, I do not get any impulse pattern here. So the impulse nor corrective patterns fit here correctly. So I have to consider this as a three-wave structure: A wave, then B wave, here completed, three wave again, then this is 3, 3, and 5-wave structure, which fits as a flat correction. Okay, so this is a flat correction, that's what I'm assuming, and this could be ending diagonal. It has finished the move. So if there is a rapid drop that is coming in, it will quickly come towards the start of this wave C. So this is what we can assume. So if this wave count is right, then this is what we have to assume. And on the downside, as we discussed with the price action, first target is 18,200 if the next session is a red closing. So what is other bullish alternative that we have? So bullish alternative we already discussed in our last week. So let me check this here. So here we can say 1, 2, 3, 4, and then fifth wave is pending, right? Then the fifth wave is pending, but it is not making impulse pattern. It's 3 wave structure, so we cannot label them as a completely impulse starting from this point. So what if it just comes towards this but does not break 18,458, or even if it breaks, then 1212 also possible. So I want to wait now to see if it really creates the bearish pattern And if it really goes towards 18,200, then there is a scary situation for us, that there could be a temporary top here, or you could say a few months top here, and it could continue giving dips on the downside, and it can continue going down on the downside. We have to revise the wave counts. I need to think hard on what pattern can form here. So at the moment, there are divergences as well on daily chart. So we'll look at that. So you can clearly see here there is a divergence, right? So this is first top, second, and then third, and we just have one red histogram candle. So there is a divergence and one red histogram. So this could be a potential start of a temporary correction. So I need to hide this wave count for now, alternate. Okay, so if this is what we are considering, then what pattern can fit here, right? So this can be entire wave A, this can be B wave, then we'll have a C wave. Now this will be 1, this will be 2, 3, 4, 5, like this. It can end below this. So that's a scary statement, and I don't want to scare you right now. So ignore this wave count for now. I need to look hard. But as far as I know, I'll have to look for some bearish pattern because of 2 days selling, and there is a hourly chart divergence. Hourly chart. You can see clearly a divergence here. There is no complete bearish picture here as of now yet, because the MACD has just entered below zero line, and it has tricked once or twice to us, right? But I would assume that it needs to break this low on MACD for us to be scarier and considering the bearish alternative. And global markets are still bullish, so we don't know yet. FIs are still buying, so we don't know what will happen considering these wave counts. So we have to be careful and not to consider or fix a particular wave count as of now. We have to wait for 18,200 break conveniently, then only we'll look for alternative waves. So for next week, as I clearly told you, in next session, if we close red, then look for 18,200. If we did not close, then the up move will continue till where you already know the targets. And yeah, first target will be somewhere near 18,950, and then subsequently 19,200. That's what we can assume. So we'll look for those in more detail in a next week's analysis. For now, this is what I can consider. Hope you read the summary, and yeah, let me know in the comments if you have any doubts. And thanks for watching. Have a great day ahead. Bye bye.